The market has had us stuck in limbo, whether we're looking at the S&P or the NASDAQ, since April the 3rd. And what I want to look at in this video are the catalysts that I believe are finally going to decide whether we're going to break up out of this sideways trade that we've been on, or if we're going to break down from where we currently sit. So I want to talk about that in this video and share those catalysts with you. Also in this video, I'll be using the Moo app. You can find a link for that down in the description, and by using the link for my video, you get up to 15 free stocks. For depositing $100 or more, you get 5 free stocks. By depositing $1,000 or more, you get 15 free stocks. And again, that is available down in the description. You can also find down in the description the link to Patreon if you'd like access to my Patreon exclusive content, and also access to my private Discord where I post my buy and sell alerts and also converse with my community members. We'd absolutely love to have you over there. With that said, let's get over into the catalyst. So looking at the calendar, looking ahead for what we have coming up. Today, first of all, speaking of catalysts, the Dallas Fed Manufacturing Index. If you notice, the market's doing sort of kind of okay and holding pretty steady, and then around 10:30 we saw all the markets change and kind of drop a little bit. And the reason for that is when you look at the price that we got, I'm sorry, not the price, when you look at the index value that we got, it comes in at negative 23.4, which could be a sign of economic contraction. And what we're all worried about is the idea that a recession could be in our near future. So the market is sort of trying to decide, what should we do about the earnings? We're getting mixed signals here. What are we seeing with the economy? Are we going to contract? Are we going to see that recession in 2023? And that's very hotly debated. So that brings me to the really big catalyst that we have coming up on Thursday, which is GDP. I made a video on that showing the spreadsheet, and you can see consensus as per Trading Economics coming in at 2%, and then that's for the growth rate. And when we look at Fed now, we actually see that coming in at 2.5%. Like I said, watch yesterday's video for that if you want to see more information on GDP and what it means for getting a really hot number for GDP for Q1, followed by a sort of a cool value for it to wrap up the entire year, and what that could indicate about recession. I think that's really worthwhile information, is why I shared it with everyone. Now, mind you, on Friday we get personal income and outlays, which we get to see personal spending, which we actually see from consensus and forecast that's coming in negative, that we actually see it dropping on a month-over-month basis for the month of March. And then personal income coming in 0.2% consensus, 0.4% is the Trading Economics forecast that we get for that one. Either way, the previous running at 0.3, it's a little bit hot for what we want running on that 0.1, 0.2%, but hey, we'll take more money. In the meantime, no fear of wage price spiral, so we're good there. Core PCE, 0.3 or 0.4. And from what we saw from CPI was a decent read for us. So coming in at 0.3 or 0.4, I don't think it's a major impact to markets. If it comes in much higher than those values, that could be a little bit shaky for us, especially if because it's the Fed's preferred measure and they have their meeting next week, May 3rd, we find out, which is on Wednesday, by the way. May 5th is El Cinco de Mayo, so if you celebrate that, well, there you go. We got a nice way to end the week for that. So May 3rd being the conclusion of the Fed meeting, and we find out probably around 2 p.m. whether or not they're going to do the 25 basis point hike. Most likely they will. When we look at the CME FedWatch tool, right now it's coming in at 91.4% chance that we're going to see that 25 basis point hike, and people believe at this point in time that's a near certainty. If we got a pause, that would be a surprise, and the market would go very volatile at that point in time, wondering why the Fed would choose that. And we'd really want to hear from Jerome Powell what he has to say based on that decision. And if we saw 0.5, the market, I think, would be treat that very badly. More volatility, most likely to the downside, because we would see a much more aggressive Fed than what we are expecting. But like I said, with 94% chance, we see nothing on the table about a 50 BP hike. I don't even think it's worth talking about beyond that. So we want to watch personal income and outlays coming out, because that is the last inflation indicator that we get prior to the Fed meeting that takes place next week, May 2nd and 3rd. And then finally we get Michigan's consumer sentiment, and we want to see that final expectation for April coming in with lower inflation expectations for that one. Hopefully it comes a little bit more optimistic, and we'll see as that comes out. Honestly, I think there's a lot of rattling going on from when we saw the banking crisis in March. We're seeing a little bit of echoes from that going on. I think that we're going to see it a little bit softer this time, so we'll watch that come out. I think May is going to be really exciting. I think I said that in one of my previous videos last time I covered consumer sentiment, that May, following the Fed meeting, would be that really exciting time to watch those values come out. We get those preliminary results on consumer sentiment in the middle of May. So I want to switch now over to the markets since we talked about catalysts. So let me bring down this and pop up that. Bam, there we go. So what we're looking at here is Invesco QQQ. So looking at the Qs as we are, you can see that sideways trade that we've been on. So right here was the last strong update to end March. It was a strong end to March, and then just sort of barcoding, if you will, just bulls and bears, can't really decide, don't know exactly what's happening. You can see down here on the RSI that some of the momentum's dropping, but we're still in bullish territory. We're up above the 50-day and 200-day, also very bullish, and we're not, you know, it's decently above it. We're curling back down towards it a little bit. So, I mean, honestly, just not a whole lot of excitement. So one of the big things, GDP, we really want to know about the outlook of recession. We want to know about the outlook of inflation. And finally, we want to know about the outlook of the Fed meeting. So that could be anywhere from Thursday of this week, which is April 27th, all the way to May 3rd. The market, I don't think, keeps barcoding throughout those dates. I think by May 3rd, we see that break one way or another, and I can't imagine that there's anything but a lot of spreads out there, whether it's the bulls taking buying calls, thinking that this thing's going to shoot upward, or the bears buying puts, thinking that this thing's going to drop. We're going to have to wait and see what happens. We do see a little bit of upward price action, followed by a falling momentum that we have here. That could be something that would indicate that we're going to see that price fall. However, I don't know, it's the strongest indicator. If we saw this go down below 50 in the RSI, I think that would be a stronger indicator for us that we would see a drop coming up. But it's going to be GDP, it's going to be inflation, consumer sentiment, and then the Fed. Those are the things that move us. Now, there is another near-term catalyst. Let me show you the SPY, and then we'll talk about those. So here we're looking at the SPY, much the same story, although we don't see the same falling momentum that we saw. As a matter of fact, if we look at the candles, we actually have the bulls making pretty impressive performance up here, that the bears can't keep the downward pressure enough. It is possible that the SPY is the next thing which tracks the S&P to pop off above these levels right now. We are currently sitting pretty much at support, and we have room from 412 up to just the peaks of these candles right around that 415, 416 level, and that could even possibly take us up to like that 420 to 425 level that we saw this previous high, and that would be incredibly bullish to retest that high, and even more bullish if we're able to beat it. So we're going to have to see what the market does as those values come out. So the other thing that I want to show you, tomorrow is a really big day for us for earnings. So when we look at the earnings, let me bring it back to my beautiful face here. When we look at the earnings, listen to this. Tomorrow, Tuesday, April 25th, we got McDonald's, Microsoft, Google, Visa, just to name some of them that are coming out. So McDonald's is absolutely huge. So hearing their economic outlook is going to be incredible for us. Microsoft, McDonald's, by the way, is before the market opens. Microsoft, Google, and Visa are all after the market closes. Wednesday could actually be that first big day that we see based on these earnings that we have. McDonald's could be something that also puts either upward or downward pressure on the markets if they give us a clear indication one way or another. Just some economic certainty, I think, is enough to move us, especially from a big company like McDonald's. So let me put this on the screen for you so you can see what it looks like. So here it is on screen. So what we're looking at, let me actually go back out of the screen for a moment. When you go to the Markets tab, which is down here at the bottom, as a matter of fact, I got it right there. I'll get better at this. So when you go to the Markets tab at the bottom, you can actually then go up here to the earnings calendar. So when you tap on that button and open it, it shows you the current day. So we see Coca-Cola, who reported earnings today, Telefonica, Simpson Manufacturing, Credit Suisse, First Republic Bank, and then when we go to tomorrow, and what you can see, all these orange icons that I have, get my coordination down, this is that I have all of these earnings added to my calendar so that I get notified as they come up, and you can actually watch the earnings calls as they come out, so you can get the information as it's there for you live, and that is just a wonderful feature that you can actually listen to those earnings calls, and you can actually see why the after hours or why the pre-market hours stock behaviors, see how people are reacting to that news that is just as bullish, bearish, or no news at all that you might think it is. So I have McDonald's on here, Microsoft, there you can see Google, and then Alphabet C, Alphabet A stocks, and then finally Visa down at the bottom. So Microsoft and Google, just add a little bit of flavor to that. Microsoft and Google is going to be incredible to hear from. Honestly, I think they're going to move in opposite directions, because whatever Microsoft's win is in the search market share category versus Google, if there's any shift whatsoever that shows that Microsoft is overtaking Google just after a few months of partnering up with ChatGPT and people are actually using Microsoft Search, that is something that people's ears are going to be just, enormous listening for to see exactly which way that's going to go. So if you see Microsoft start to shoot up off of that, then expect to see Google start to fall through the floor on that news. So we really want to hear that, and I don't know that Microsoft and Google, at least as far as search goes and ad revenue, search revenue, that whatever that happens to be, if Microsoft is able to start stealing a significant amount of Google's market share because of their partnership with OpenAI, that's going to be something that is not good for Google. So we can see that through their earnings, and people are really going to be scouring through for any sort of indication over how Microsoft is doing in that race against Google, or Google's race against Microsoft with ChatGPT, and then what we have Google with, still the poorly named, in my opinion, Bard. So I really, please, Google, change the darn name from Bard. I mean, they're still not going to listen to me, because who am I in this anyway? But still, I'd like them to change the name if they could. So this market, I don't think is going to stay in one place very long. As soon as tomorrow, I think that we start to see a break, maybe by Wednesday. If it's not by then certainly at the very latest, I think by May 3rd, we know what direction the market is going to take, because we have big earnings that are taking place, especially with big tech. Visa coming out and talking about credit, and then we also have Google. Meta's also coming out. We have that one coming up. Apple actually comes out next week. A smaller company, but still a fun company, SoFi. They report on May the 1st. I think that's going to be a big one to watch. I'm going to have a video coming out on that one for you guys. If you like what you saw with the Moomoo app and you don't have it yet, please find that link down in the description. Click the link, sign up, and deposit your cash. And not only are you supporting yourself with those free stocks, but you're also helping out this channel, so thank you. And if you like my commentary and like to hear more of it, check out the link for the Patreon down in the description. Click sign up and then hear more of my Patreon exclusives. Be part of a member of my community, see my buy and sell alerts, and talk stocks with me and bounce ideas off of each other. We'd absolutely love to have you over there. Thank you guys for watching this video. If you liked it, hit the like button, subscribe to see more of my videos, and ring that notification bell to see anytime that my videos come out. I am Dr. Stock, Doctor of Education. We'll see you in the next video.